Greetings, ladies and gentlemen. This is Houston Trong from thetradingedge.org, and here is your weekly market outlook for November the 18th to the 22nd, 2019. First and foremost, congratulations to all the bulls out there. SPYs, Qs, and the Dow logged all-time highs this past week, actually closing at all-time highs, and of course, the Dow actually managed to close above 28,000 for the first time. So it looks like we're going to end the year strong and the decade strong. And once again, what can you say? The markets are trending to the upside. This past, if you recall in last week's video, I tried to talk some of you off the ledge, so to speak, because I did mention that the markets are now trending to the upside. And as the saying goes, the markets can go a lot farther than you can remain solvent. So the key thing as it is now is to understand the markets are still trending, and you don't want to get in the position of trying to short the market repeatedly and getting exhausted with your failed shorts and then missing the actual right time to short. So we'll talk about more what that looks like in this video, but let's talk about what we can expect for the coming week. So in terms of the econ calendar, sort of a slower news week. Tuesday we have housing starts, nothing too major there. Wednesday, everyone's going to be looking at the FOMC minutes to see the verbiage from the Fed. Thursday, jobless claims, potentially market moving there. Existing home sales at 10. And then on the earnings calendar, we've kind of passed the peaks earning announcement season, so a slower earnings week this coming week. There are a couple of names that should be interesting to watch, like Home Depot, for instance, I believe it's on Tuesday. Yes, on Tuesday. And then for the most part, the big names have passed already, but continue to watch which names you're trading to make sure you're not taking on any earnings risk. So let's get into the charts now, and then we'll talk about some more about the week that was and the week coming up. So as I mentioned and alluded to right from the get-go, the markets have been trending to the upside. This means VIX has just been basically melting to the downside for quite some time now. And it's one of these situations where the markets are certainly trending to the upside, and you do not want to be fighting that trend, especially when you have such a pronounced trend and it's so apparent. However, there comes to be a scenario where the charts oftentimes look the best right before they look terrible, right? That's basically what tends to happen, is that when things cannot look any better, unfortunately, that's kind of pretty much the top or the intermediate top. Now, by no means am I trying to call a top right here, right now, but this is something you need to begin to watch for, as you're really getting to a situation now where it's all based upon herding and trending now. So continue to follow the price action. And as I said in last week's video, the 8-period moving average has been holding this rally now for the past month or so. So once we broke out of that sort of consolidation period in mid-October, it's been about a month now, we've been trending nicely to the upside. And we'll talk about that trend here as we talk about SPY and the VIX. So let's get into the actual charts here. So on the VIX, let's do a quick one here. Nothing much to recap because it's just basically trending to the downside. Month, a red month, right? Can you see that? It's a red month. Yes, red month and decaying. Pretty soon here, they're going to have to reverse split the VIX. Otherwise, this thing will get to single digits and it will then go to zero. So expect to get this thing to split if it does not pop up soon. Wednesday, actually on the weekly chart here, you have a weekly chart that's pretty much straight down into the lows, and this is what I'm talking about in terms of the charts looking best before they look terrible. Because if you're short here, things are looking fantastic for you, right? So now the trend is certainly down, momentum is to the downside. It just has to keep going here now, because at some point there's going to be just seller exhaustion, and you're not going to have any more sellers coming in here, and that's when you're going to get that large snapback. And when that snapback happens, as you'll see in the SPY chart, there's going to be a lot of potential range that will be recovered very, very quickly. Now when that happens, that's anyone's guess. We're just simply waiting for the price action to tell us when to take that short. December would be the first time that I would get interested, but certainly we can have small pullbacks along the way, but you'll see when you get the SPY chart that it's not the time yet to be taking big shorts. Everything is, all pullbacks right now are still buyable. So on the VIX chart, on the 2-day chart, this is what you want to be watching for. momentum down condition, right? So here, outside bar down, coming into Monday. This momentum condition is going to continue to continue to keep going until you get a prior high get taken out. So this high on Friday needs to be taken out before momentum to the downside gets alleviated. Just like what happened last week, right? So we had here, okay, so we had an outside bar and down going to Monday. So remember last Friday here, I said, okay, watch how it breaks the outside bar on Monday. It went outside bar down. That means momentum to the downside. Tuesday, it went down again. And on Wednesday, right here, we had a small blip to the upside with another small blip on Thursday. That 8-period moving average, there's the blue line right there. This is what I've been talking about in last week's video. It's holding very, very nicely here on the daily chart for the VIX. And until that trend line gets broken, there is no reason to be fighting this trend. You do not want to be trying to fight this trend. Now, there's not to say you can't take small counter trend trades, right? But they're very quick trades because they're profit takers. Because that 8-period moving average, like, you know, if you buy this down here or you short the SPY, you got to cover there, right? It gets very tight. Is it really worth it? You're playing 1842 to 1867, right? That's 25 cents. Now, if you short here, you short here, 63 down at 1739, right? That's $1.24. So you're getting way more downside than there is upside. So there's really, you're playing for pennies to the upside and you're playing for dollars to the downside. So you have to, to weigh that. Is it really worth the risk of playing for pennies when you can play for dollars to the downside? That's what I talk about when you talk about trending markets. So continue to watch that 8-period. Does this thing get violated? And if it does, this is what it's going to look like. You want to see a close above this 8-period. Okay, so let's say here it goes 3. This is an outside bar down. It comes back up here and it closes somehow above the 8-period. It's a close above, and then the next bar it goes higher, right? So you basically have 2 consecutive bars now that above that 8-period. Then that's going to be a break of that 8-period moving average. But for now, it's just touch and go, right? The next line of support of resistance is you're going to wait to see the 8-period break, or for a close above the 8-period, and you want to see that test of the 20. That will be a good test there. That will show the metal of the bears on the VIX contract and of the bulls on the SPY contract. Okay, so that's the daily chart, outside bar and down. We want to watch that downside action. And likewise on the 2-day chart, it looks like this, outside bar. Okay, so outside bar, what's the next bar? All right, so really quickly on the 4-hour chart, this is what it looks like. So that little blip to the upside that we saw was right here. Okay, so here's your Wednesday, and it goes Thursday and back down. See, so that little blip to the upside was very, very small, right? I said it got up to 1869. Yeah, 1869 area, and it's from here, right? So you can see outside bar down. This bar here takes out the momentum to the upside and it goes outside bar up, and then here, once this bar gets taken out, outside bar back down again, outside bar down, momentum back to the downside. Okay, so continue to watch this outside bar down condition. That's momentum breaking, below the Bollinger Bands. Has to keep doing the Bollinger Band walk, because if it doesn't, it's going to pop back up. But look, that 8-period, even on the 4-hour chart, is holding. Okay, even this is holding. So until you get a break above, look, you have to go back all the way, as I said before, mid-October, when we finally broke out of this consolidation, this sequence here, right, this chop, this noise, when it finally broke out of that, look at how the moving averages start to spread out. Now, I'm not a big fan of moving averages, just because they're lagging. You don't have to wait for moving average to cross to take a trade, because this trade here is very nice. That's even before that here, but once it breaks out, right, the VIX gap down, it causes the moving averages to spread apart. Then you get this trending condition. And look at the taps. 8-period, 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 right? And there's no closes above the 8-period moving average. Here, there's a close right there above. That's the first close back on the 6th of October. But look, the next bar did not break above there, right? So that ends up being a sellable pullback. Pullback, and they sell it again. And since then, we've had no closes above that 8-period. So you're looking for a close above that 8-period. Can I say that enough? No. So the whole point is I'm trying to talk anyone out there who's adamant on shorting the markets, that there's a proper way to frame the trade, and that is when you have more of these conditions in your favor versus trying to call bottoms or perceived bottoms. Because as I said before, there is no bottom here, right? Because VIX is meant to go to 0. So you're not going to have any support here. And because SPY, now let's go to the SPY chart, is at all-time highs, guess what? There's no resistance, right? So there's no more resistance left there. If you're playing levels, there are no levels to trade against anymore, right? So this is why at this point here, you don't want to try to be the hero and try to call the top. It's better to be there's a saying that says it's better to be a scout than a hero, right? The hero is the person who dies on the battlefield. The scout is the person who goes out, searches around, examines the battleground, and then comes back in to make some examines the data and then makes the call for the next action, but doesn't die as a soldier on the battleground. So onto the SPY, mirror opposite. Outside bar up on the monthly chart, momentum to the upside on this month now, right? So as I said in last week's video, and since the beginning of November, you're not going to extinguish this momentum condition until this low gets taken out. As you know, we drew this broad information a long time ago. I'm seeing more people draw this on their charts now, but we've had this broadening condition on our charts for a long time. And the fact is, on the weekly chart, we broke above this broadening formation 2 weeks ago, right? So at the beginning at the end of October, and we're into the Bollinger Bands. So as I said, you're doing the Bollinger Band walk, you're above the broadening formation. The trend is actually starting to increase, like the rate of the acceleration of the move is starting to increase to the upside, because the bars were smaller and now the bars are actually getting larger. So there's actually more money piling into the SPY as we speak. You may not see in the volume here, but you can just clearly see it in the actual overall ETF market, not just the SPY. Okay, so on the SPY chart, we have that big green up week, so nice week for the Dow, close to up 1%. And on the daily chart on the SPY, actually, let's talk about the 2-day chart. The 2-day chart first. Here, just kind of like the VIX, outside bar up, then we have the outside bar here, then you got outside inside, and they break to the upside into those all-time highs. So it's a very nice sequence here. Outside inside, people tried to sell this, and then clearly they broke to the upside, and look, they closed close to the highs once again on Friday, squeezing all the shorts. Okay, so they really squeezed them into the close there on Friday afternoon. So this is what you need to be wary of, though, for the SPY. Because we're now trending just like the VIX. There's plenty of support being offered by the 8 period, right? As I said already, look at those 8 period touches here. This thing is trending very, very nicely to the upside now, and the momentum's actually increasing as we got a gap up now on Friday. So the question is, if and when the trend starts to weaken and we start to come back through the range again, there's a lot of unfilled gaps on the SPY, and this is what you want to be noting down on your charts, because these will be potentially levels that the SPY will get to very quickly once the range and the upside momentum gets broken. So for instance here, that there was a gap there, right? And that got filled very quickly about 2 weeks ago. So not this week, but last week, right? So that came in and they filled it very quickly. But look how many gaps there are still unfilled. So that it got filled, but here's another one here from the 31st. That one there, yeah, it's still open. We have another one down here, and then another down here. And these are all intermediate gaps, so it would not be surprising to see a move where if the SPY comes back through the range again, you still have to contend with this support line right there. It's broadening formation support line. But if it cuts through there and it breaks below 20 period moving average, we're going to quickly revisit some of these unfilled gaps. Okay, but for the time being, the momentum is to the upside. You can see that on the monthly chart. We're not coming back through the range yet. But if and when it does subside, definitely note those gaps. Now I'm going to bring up one chart that I haven't shared in a little while that I do share on occasion. So let's bring up this chart over here. I'll just slide it over here now. Here's our SPY chart overlaid with the number of S&P 100 stocks currently trading above their 50 period moving average. That indicator is the blue one, and the SPY is obviously the ones in the candlesticks. So I'm going to delete some of these lines here. And so right now things are trending very nicely, right? And we're actually getting higher highs in terms of that S&P 100 indicator where the stocks are trading above their 50 period moving average. So right now there is no divergences in the market. The markets are doing, are very healthy, and you can probably expect to see more highs. But this is what you want to be looking for. Like these are the kind of things you want to be looking for. Start to see a divergence in terms of the number of participating stocks. But right now we're getting highs. As the market climbs higher, we're getting more and more stocks above the 50-period moving average. And as a buyer, as a bull, this is what you want to be seeing. You know, that's a healthy market. Now, when things begin to slow down, we get to see the divergences. That's when you start to get alarmed, right? But right now, you don't see that yet. Right now, the stocks, it's currently at let's see, around 78% of S&P 100 stocks currently above their 50-day moving average. Back in July, we got up to 86%, around that area, 85 something. So that's how far things can really go. You can go even higher. Look, this is way back in February when we first started to make all-time highs. It got up to 90-something%, right? 90-something% of S&P 100 stocks at that time had been above their 50-day. So, you know, how far can this market go, and how far can it stretch? You know, how many individual or how many participating stocks will be involved in this rally? That's what we want to watch, and then see, can it carry forward? Okay, because you see what happened here back in Feb. This is the same kind of condition. Around the 8-period moving average, then you have a pullback that tests the 20, pops back up again, and then from that point on, you have this fewer and fewer participants actually involved in the rally. So you're not going to get a single top. You're going to get, you know, a breakdown, or more than likely you're going to get a breakdown. It's going to recover from it, and then you get fewer and fewer participants, and then you begin to see a divergence, right? When you have fewer leaders. But right now, a lot of stocks are starting to participate in this rally because you know, we've come from levels down here back in October where we had, you know, man, only 30% of those stocks over their 50-day moving average. So things have changed a lot since then, right? Since all early October. That was only, you know, a month ago. So, you know, big bottom here that happened there, and then boom, off to the races. Let's go back now. So let's minimize that chart, and we'll go back to the Qs now. We'll go a little faster. Let's talk about the Qs now. Q is a lot like the SPY in the sense that we have this outside bar up condition, so momentum to the upside. I'll delete some of these lines here now. I'll do some housekeeping here while we're at it. Inside bar reversal to the upside, momentum to the upside now on the SPY. Nice green week for the Qs. Above that broadening formation, just like the SPY. Now into the Bollinger Band, so starting to do the Bollinger Band walk, has to keep going, otherwise we can expect it to come back and retest at least the support line here from that broadening formation. On the 2-day chart, let's zoom into this one here. Very nice sequence for the buyers. Outside, inside, just like the SPY, right? And then up. Now on Thursday, Friday, it did come down a bit, but then boom, onto Friday, it did a big outside bar. Now on Monday, we want to see, does it go outside bar up, outside bar inside, or outside bar and down? But just like the SPY and the VIX, that 8-period, right, looking very strong. You just, you know, keep your eye on that. That is pretty much as simple as it is right now. It's just keeping your eye on that 8-period moving average because it is holding very, very strong across multiple time frames. So going into Monday, inside bar on the Qs. Would not be surprised if the gap's down a bit, but expect buyers just kind of step back up again, and people are gonna keep buying until it stops working. Okay, I'm gonna say that again, right? People are gonna keep buying until it stops working. Sometimes it's just as easy as that, and there doesn't have to be a reason why. You know, until it stops working, people on Wall Street and investors will keep doing things until it stops working. So Russell, still inside year, probably not going to break outside of last year's range, but very, you know, decent year for the Russell, getting close to 19% up year to date. Inside year, not a bad year though. Okay, on the monthly chart, now a green month, so broke above last month's range, so up 2.25%. I did go down this week though, right? So it went down, but it reclaimed the lows. So it did break below last week's lows, but they bought it back right away. Now on the 2-day chart, let's get to that. Very similar sequence as the rest now, so we can go a little faster. Outside up, and now here's what you want to watch for: inside, outside, inside. Right? This is a nice sequence. We like this sequence a lot. Inside, outside, inside. Now you want to see how it breaks, which way it breaks outside of this range. The bias is to the upside, obviously. So if it does, you can expect Russell to get even more gains. Okay, on the 4-hour chart, it gives us this potential here for inside buy reversal short to the downside, but again, you have to counter that with this inside outside inside pattern on the 2-day. This is a longer term pattern, so more pertinent, and I would prioritize more to see how this side breaks. Okay, which side it breaks out of. On the Dow, we see the same thing as SPYs and Qs, outside bar and up. That's momentum to the upside. Again, Dow above 28,000. The Dow index going into those all-time highs, closes right out those highs there, right? Weekly chart, and you see now you're above this broad information trend line. So I'll draw the bottom there, and I've talked about it many times, that formation. So I'm just going to draw it in here. Okay. Oops, wrong. I'm just going to draw it there. Okay, so on the Dow chart, basically we're looking at this 2-day sequence here, where I'll go back. There he goes. It's just going right into highs now. Okay, so here's your last week. Ends the last week here on the inside bar, right? Inside bar up. It's just that easy, right? Climbing this 8-period moving average. On the daily chart, outside inside, resolves to the upside on Friday. Now, if the sellers step up, they go inside buy reversal to the downside, they take out that low and come back into the range again. We want to definitely be watching how it transacts or trades against that 8-period and the 20-period. That's that's what you want to be keeping your eyes on. But for now, that 8-period EMEA, I'm repeating the same thing over and over again, but it's kind of just that is the nature of the markets right now. It's trending, so you just want to watch that moving average because that's what a bunch of other traders are doing. Just continue to watch and see if this thing can hold. Okay. So let's talk about TSX. TSX finally, playing some catch up with the neighbors to the south, hit some all-time highs, and in fact, the TSX had a really good last 2 weeks here now. We've had, so big solid green month now for the TSX, up 3.3% for the month. 3 consecutive green weeks in a row, right? Breaking out of here, right? So we talked about this. Inside bar reversal, once it took that out, boom, it's back to all-time highs. And we now have 11 straight green sessions in a row for the TSX. So, trending to the upside now. Look, see this mess here? That's consolidation. Remember, that's an inside bar reversal on the weekly chart. See that lower low? That's the inside bar reversal. Pops back up, and then boom. It's been 11 straight winners in a row there. So TSX into highs. Just continue to watch this outside bar and up situation. It's trending, in the basically it's quite an aggressive trend here. It's getting very, very steep, so wouldn't be surprised at some point if it's going to come back very quickly to retest the moving averages, as that is what you're going to see in a trending market. Okay, emerging markets. With all the discord in Hong Kong, the emerging markets market has not been performing as well, but we're still getting a green month here, 1.29% for the month of November. But we did get a lower week this week, so the week did gap down and create a low here. So it did break below last week's low, and it did break below the monthly open, but they bought it back. Okay, so for the emerging markets market here on the 2-day chart, it would look like this. So what happened last week was it went outside bar up. We saw that last week. I talked about it, right? As soon as this low got taken out, the momentum got extinguished, was what I said. And so now we have the condition where it comes back through the range again. Did not do enough to take out the prior or the lows from October, the last week of October, but it got close. It's coming in there now, but the buyers did step up and buy back. So what that looks like here on EM is this situation here. Okay, so now we have this situation where it went outside bar and up and just ran out of steam. Hit that purple line. That purple line is the weekly open. This is why it's so pertinent, as we see that the weekly open acts as resistance or support, depending which way you're testing it, and it hits it and it cannot break above there at the end of the week. But now it got sandwiched, right? Look at this. Look at the price action. It got sandwiched exactly there, right there, right? That's the monthly open. So it got sandwiched in between the weekly and the monthly, and you had a bit of pinball to end the Friday session, squeeze in between those two ranges. So you kind of want to see how that breaks outside of that, how it breaks outside of this little sort of squeeze area. So do we have an open higher? Is it open lower? And then you want to see how it trades as it relates to those weekly and monthly opens, because the quarterly opens way down here. So it's unlikely you're going to change this quarter green. You're going to turn this quarter red, because it's a solid green quarter right now. But if EM starts to go gangbusters once again, starts to pick up speed and pick up steam, then expect even more market gains. Okay, so let's talk about TLT. The risk certainly appears to be off now, or excuse me, on now, as the safety trade, the move into bonds and gold has the momentum of that trade anyways has subsided. But you know, TLT did bounce back a bit this week. So TLT, we did break the month though. So inside, month, and down, that did happen. Okay, so now it's pulled back up again. So that orange line indicates the break of the prior month's low, right? So there's your break below the prior month's low. And the weekly chart looked like this. So it went outside bar and down to break that monthly low. Now it's a pullback up into the range again. So you simply want to watch for the coming week how it gets outside of this range. So if it breaks below this bar's low, this was just a small consolidation period, and we can expect to come back lower, back into this range again. But if it does break higher, expect this level to get tested. However, you got that monthly and quarterly open right there. That will be significant hurdle for the TLT to break out of, especially with only 1 week, or sorry, 2 weeks left in the month. So you definitely want to be seeing how this range breaks down in the coming week. Okay, but essentially, you know, just keep your eye on that inside week condition and which way it resolves. Because on the 2-day chart, if things, as I said already, if they break below this low here, there's a chance it comes back into the range again, takes out that prior week's low, and then, you know, putting that and breaking back below the monthly open, right? So all it takes, see that monthly open is right there, that orange line I mentioned before, right? The monthly open, that orange line, that's the prior month's low. Sorry, I said monthly open. That's the prior month's low. So once we get to that prior month's low, we'll go back to the 2-day chart. That will break it back to the downside again. So right there, it's very, very close. The prior month's low, if we get that break back to the downside, this monthly chart here looks bad once again, and then we can possibly come back into the range testing this level here. Okay, so watch out for that. All it would take is for this 2-day low here to get taken out, for this monthly low to flip back into effect. Let's talk about GLD now. So GLD, red month for GLD. Just manage right now to hold that quarterly open, right? So here on the monthly chart, there's your blue line. That's your quarterly open. You know, broke below there, but it's managed to climb back up now. Can stay above that quarterly open. On the weekly chart, there is still momentum to the downside, right? Outside bar, down, down. I already drew it in, but in order for this momentum move to get extinguished, you need to see a break above that weekly high. Okay, so keep your eyes on that one, and we want to see, can it break above there to extinguish this this momentum move to the downside. Silver now. Let's break into the silver chart. Silver, not much different than gold, but a little bit more bearish, a little weaker. So it did go inside month and down, and it did stay below that quarterly open. So the buyers could not bring it back above that quarterly open. So the speculators there haven't been as strong as in gold. So on the weekly chart for silver, you did get this situation, right? So inside bar and down, and it's still going down. And again, they did test, they retested that quarterly open right there, but they could not break above it or close above it. So that's definitely weaker on the silver chart. So the silver is kind of leading gold here. So continue to watch your eyes if you're trading silver, or if you're trading gold. Silver here is certainly telling you there's more weakness in this space than the gold charts are showing you. On to the Bitcoin chart, because Bitcoin itself has also gotten weaker, but the volatility is still very, very tight. Although the bias now is more clear. And as I said before, it's going to be very difficult for Bitcoin to not be an inside year, right? So we only have a month and a half left. Sorry, wrong Bitcoin chart, excuse me. Okay, it's going to be very hard for this not to be inside year. Month and a half left, firmly inside of last year's range. Still a big range, so still opportunities there to make money, but very, very tight stuff. So on the quarterly chart, inside, it actually did break below the inside quarter, right? Inside and down, but did pop back into the prior quarter's range. So So on the monthly chart, you still got a inside month, right? So even with the bit of selling we've had, down 7.5%, still inside month, trading above that quarterly open. Quarter is still green. Okay, so is this simply a pullback now after the break to the downside on that quarterly chart, or do the buyers step back up here and try to come back up to this range here? So on the weekly chart, we did get the resolution. It's still working its way out, here, but we did get this resolution here, where it's currently playing out. So inside, outside, inside, right? That's the pattern I talked about earlier. Like this pattern a lot. It breaks to the downside, and it's just going down very slowly, but it is going down. So watching this chart now and just seeing, that's the direction of the breakdown, and expect, if it keeps going down, they can take out that quarterly open right there. That low will be in play. Okay, so that will be significant. If it can break up below, here's the two significant levels. The quarterly open right there, around 83.25 area, somewhere in there. And then if it can break through that, then we're gonna put this next line in play. That line there, the red line, that is of course our quarterly, the prior quarter's low. So that will flip this signal back into effect again. All right, and then once it breaks below there, you expect this low to get taken out, because that's just too juicy of a pivot not to retest, and that will complete the outside, inside, and down pattern. So that low there would be 73.33.4 on the Bitfinex chart. I am personally short this, so full disclosure, I am short on this signal here since November the 7th. I've been short around that period. The signal came up on November the 5th. I got short on November the 7th area. So here, inside bar up, inside bar. Once this breaks down below the November 5th lows right there, I get short here. So short from here, from 91.85.1 area, and down, slowly hoping to see if it comes down here or not. The other thing I don't like about this trade is that it's going very, very slow. But we don't have full time frame alignment, right? But it is trading below the weekly open, below the monthly open, but the quarter, as you saw already in that previous chart, it is still holding. So just something to watch out for on the daily chart, right? It's just going very, very slow. And with cryptos, they can bounce back very quickly. So even if you get the direction right, usually they play out rather quickly, right? As you see big moves like that, these slow melts are oftentimes countered with very, very quick pops. So even if you're right on the trade, you're not going to feel comfortable until it really starts to break down and then trigger a bunch of stops, and people get extremely bearish very quickly, and that's where you can actually exit your position, right? Versus the slow bleed now, which can be quickly countered by a quick pop that then basically takes away your gains. Okay, so that's Bitcoin going very slowly, but still working. So let's proceed now to a few final charts, and then we'll wrap it up for the week. Again, not too too much to analyze this week, as simply a trending market here. Just follow the trend. Let's go to a weekly chart now and go through a few quick charts for the coming week. Visa and MasterCard both showing outside inside patterns on the weekly chart. So which way does Visa break? Visa outside inside, right above the quarterly open right there. MasterCard, same thing. Okay, outside inside, above the quarterly open. So bias sits to the upside. Let's see how that breaks. Or if it does break to the downside, that would turn the quarterly red possibly, right? So that would be significant. You want to see how this thing breaks, especially MasterCard, because it is actually close to the quarterly open right there. If somehow it goes inside bar and down, or goes outside bar then down, and it breaks below this quarterly open there, that would be significant. Okay, Square, outside inside, sitting right there. There's your monthly, there's your quarterly open, right? Full time frame alignment to the upside. If you break it back above there, you can come back up through the range again. Square. Net, so Cloudflare has not had a good time since its IPO. So, but finally finding a bit of support here now. So outside inside, which way does it break? Okay, can it break above there and then perhaps test the quarterly open up here? Okay, there's Net, Cloudflare, NEWR. Okay, your New Relic. So outside inside there, kind of tight stuff there on the New Relic chart, but it is part of this inside bar up on the monthly chart sequence. Okay, so it's making way. It is off this signal here. It's still making its way back up on the month, And so, can this break to the upside on the week? One more for the weekly signals. All right, DOCU sign. So there you go. Inside, outside, inside. That popped up. Another outside, inside. So now, look, basing right there on top of the prior inside bar break. So this is a retest of the breakout. Now do you get a break up back above there again? If you look on the monthly chart, we're getting close back to those all-time highs again. And with the markets trending the way they are, would not be surprised to see that happen to go back to the upside. So let's counter that with some of our worst performing stocks based upon their Sharpe ratio. So still the worst performing stock based upon on the Sharpe ratio, or modified Sharpe ratio, is BYND. Look at that chart on Beyond. Wow, Beyond Meat. Well, still heading down. We did have a green week here, so you want to see how this thing resolves, but it's going down, down, down. It's going down very efficiently. look at the trend line on that. So very, very smooth trend to the downside. This chart already. We talked about it already. But man, that VIX chart, right? That is a trending stock to the downside. So VIX trending to the downside. All right. Another one to the downside is Revolve Group, retailer. Man, it has been accelerating to the downside, hitting all-time lows. And we talked about this one a few times already, trending to the downside. We had earnings back on the 7th, and things did not get any better. Big volume day there, and it's still moving to the downside here now. Marijuana names, boy, that was the talk this week, right? We talked about it last week. The prior Friday, we had a huge pop, and I had said maybe it was a situation where they sorry, that's the wrong stock. They buy the news and sell the rumor. That's what they did. So basically, on the prior Friday, they had that pop up. This is the daily chart. Yeah, so the prior Friday, a lot of marijuana stocks had the pop up, and they just sold it all week this week. So there's your earnings, and pow, just closing on those lows there. Cron, look at that, closing in on these prior pivots down here. Expect them to get taken out, because if you look at the marijuana ETF MJ. This is one of the worst performing names in my basket based upon the Sharpe ratio, hitting all-time lows, as these pot stocks don't seem to be getting any legs up with the reported earnings. So now momentum to the downside, outside bar down, MJ names to the lows. One more really kind of rough looking name, great short. I've talked about last week, BCRX. Okay, as I mentioned it last week, outside inside on the weekly chart. Which way does it resolve? To the downside. It is going into those all-time lows, or getting closer anyways. So these it's multi-year lows at this point, but now it is extending into those Bollinger Bands, and you don't want to overstay the welcome, because here you can see it popped up already. So you don't want to overstay welcome. This is a big volume as well, so just be careful. You don't want to be shorting that non-discriminately. In terms of high-flying names, let's talk about those. First off, Celgene. Man, this is such a smooth stock. Celgene. Okay, for the past number of weeks now, or months, right, off this outside pattern to the upside, nothing but green weeks for Celgene for a long, for the past 2 months or so. So look at that on the day chart. Very, very smooth looking gains for Celgene since the beginning of October, right? So on October it's trading at 99. Now it's at 110. So let's talk about another one, ERI, Eldorado Resorts. So also great looking trend here, looking like it's trying to get back up to these previous highs that were formed in June. Okay, on the weekly chart, very smooth stuff. AMD, okay, AMD. Wow, nice strong multi-week move here by AMD, getting those all-time highs once again. Well, sorry, not all-time highs, but multi-year highs. All-time highs were put in back in 2006. So we get back at those levels again? We'll have to wait and see. But AMD was on our watch list for some time. I'll just hide some of these drawings for a second here. Right here, when we talked about this inside quarter. Once that thing broke above there, and it's been gone since. So AMD, it's a nice mover. And two more, Morgan Stanley. So financials looking strong, especially Morgan Stanley for the past several weeks. Inside bar up. Inside bar this past week. It is in the Bollinger Bands here, so something to watch out for. It's a situation here now where look what happened this past in the April. Right? It did pop up, but if it tries to come back in again, you can expect to come back into the range as you're touching those Bollinger Bands. It's one of the situations where it's make or break. And quote, Okay, quotient has had a nice multi-week move now, trending to the upside. So nice smooth gains for quotient technology for the past several weeks. All right, hope that is helpful. As always, hope this helps your trading. If you have any questions, feel free to leave them in either the comment section on our blog site or on the comment sections on YouTube. If you do enjoy the videos, please hit the subscribe button. That will allow you to get notified as soon as we have our videos up. And if you don't mind sharing this video with your friends, then please feel free to do so. That helps grow our community, and give us a big like on YouTube so that more of our videos get the attention they deserve. As always, I hope you have a great trading week and happy trading. All the best.